Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you save a little money, make a little money. This week we're going to talk about mortgages and first-time homebuyer programs. Everybody needs a little bit of money to buy a house, and honestly, people are kind of stuck right there on the cusp of making that decision. And we want to help you to stop being paralyzed and get to where you need to be, because in 5 years from now, you're going to regret that you didn't buy that house today. So we want to welcome Max Fish with Nationwide Mortgage. Welcome, Max.
Thank you so much for having me. Always good to be on.
Yes, it's always nice to have you. It's always good to see a good-looking guy sitting next to me. I know the radio can't see you, but you know they can live stream with us.
Well, I appreciate it. I appreciate
Anyway,
it. Thank you.
I mean, your muscles keep getting bigger and bigger. I'm like, when do you have time to do that when you're selling all these mortgages? My goodness.
Push-ups in between loans.
Yes. Oh my God. Every time he closes a deal, he's doing a couple of,
Curls,
right? That's why he's selling a lot of mortgages. My goodness, they were not this big like 2 weeks ago.
Hey, it's all about getting better every day.
Yes.
You know?
So this is my mentality about this, and I feel like a lot of people are paralyzed to make decisions to make a move.
Sure.
They're scared about interest rates. But what cracks me up is that in 5 years from now, and I hear this every time, it's like every 5 years, right? I've been doing this for like over 20 years. So it's like, oh, I should have done this. Oh, I should have done that. And it just keeps just moving down the street saying that. And I'm just like, what is it that's holding people back, right? So is it the down payment?
Well, you know, it's funny that you asked that, because I heard, actually Dave Ramsey said it one time, and he said it best. He said that finances are 80% behavior and 20% math.
Okay.
So people typically don't make decisions because it's a mathematical decision. They make it because it's an emotional decision.
Yes.
Right? Mm-hmm. And so right now in our market, the problem is that the people who are actually in the industry and in the day-to-day are fighting the national news, talking heads that aren't in the day-to-day.
It's kind of funny, yeah.
And it's funny because we're in that dynamic of we're constantly battling these rumors that are out there, these things that are being spread via national news that obviously people are hearing on the radio, right? They're hearing it on TV. They're hearing it everywhere. That this is the worst time to buy. There's going to be a rate drop, and when the rates drop, they're going to get the best of both worlds. They're going to get lower prices and lower interest rates.
And I don't believe that, because I have post-traumatic stress disorder from 2 years ago, right?
Yeah.
Like where people are wanting to offer 50, 100,000 more than the list price, right? So the minute you see 5%, people are going to be like, oh my God, like.
Yeah. Well, again, it's not a mathematical decision. It really isn't, because it doesn't make sense mathematically, right? It doesn't make sense that rates would drop and prices would get better.
Right.
Maybe in other parts of our country that might be the case, but definitely not here. It's too desirable of a place.
Yeah. You know, when I first moved here, it was cheap to live here. And it was. I mean, milk was cheaper than New York. Housing was cheaper than New York. Everybody from New York was moving here. Like, hi, I'm here. It's like now it's so expensive to live here.
Yeah. Well,
right?
let me ask you a
You're
question.
paying for the sun.
I'm curious, because I've heard this said that South Florida real estate, well, Florida in general, but South Florida definitely, was undervalued for a very long time. It was almost like COVID awoke like a sleeping beast in South Florida real estate.
No, but in 2004, it was like the prices were, I felt it was like from seeing when I started, right, in like that early time, and then 2004 came, it was just like, real estate selling. Nobody was focused on it. Nobody was like flip or flop or do this, or, you know what I mean? Like nobody was, like some people I'm sure they were doing it, but it wasn't woken. It was sleeping.
Yeah.
Like you never heard people say, like every single person calling on the phone going, oh, do you have any fixer-uppers? Oh, do you have any fixer-uppers? Like you never heard that. Now, again, I'm a child at the time, but I know what's going on.
Yeah.
Even in 2005, it's like, yeah, I heard of it. People were doing it, but you could make money at it. I did it. I was living proof. When I met my husband, he was like looking at me like, this little girl's like flipping houses. Like, what is going on here? Like, he was like, wow, that's pretty attractive.
Yeah.
I mean, like, he was like, wow, right? You didn't expect me. I showed up in places that, like, you should have had a gun, and the cops would show up and go, what are you doing here? And I'd be like, I'm the owner. And they're like, what?
Yeah.
Right? Like, you shouldn't be here, little girl.
So what everybody needs to hear is that in order to get to Laura Sanders level, you need to show up in places that you shouldn't be.
But it's the truth.
I know.
Listen,
I know.
you got to start somewhere, right?
I know, absolutely.
Listen, so when I first started talking with people about buying property, right, I would say to them, they would be like, well, I want cash flow. I'm like, okay, are you willing to be in an area that cash flows?
Yeah.
You have to make the decision to want to be in that area that's going to create that cash flow, right?
Yep.
Because things that are less expensive sometimes could be in a different socioeconomic area.
Yep. And these little tricks of the trade that you're talking about, and these ideals, they haven't changed.
You have to be willing to take a risk.
It hasn't changed. It really hasn't. I mean, people will use this as a crutch, and they'll use it as an excuse that, oh, it's harder to do that now than it used to be.
It is. It is.
With it being harder, the same rules
but
and the
those
same
things
concepts.
don't sell as fast as like being in other areas.
But the same rules and concepts still apply.
Yes.
Right? Risk is always going to be risk.
Right. Right.
It's always going to be a risk. Somebody had to take a risk. Now, hindsight's 2020. We can look at people that bought real estate off of Key Biscayne in 1980 and think, oh, they only bought that for $500,000 and now it's millions. But $500,000 in 1980, that was a risk.
So funny enough, though, a man came into my office the other day, needed to do a short sale, right? But it was on a reverse mortgage. I have to say, this reverse mortgage was like, their odds just totally screwed them, right? The woman died at 104.
104?
104.
Oh,
However, I will say this. So she bought a place in Tamarack in 1979 for $104,000 for a condo, a 3-bedroom, 2-bath condo.
She was 60 then. Think about that.
Right.
60 years old in 1979.
Now, I don't know if she bought it originally to reverse mortgage, because the reverse mortgage today was in like I want to say it was 450 something was owed, right? But she paid 106 for a 3-bedroom, 2-bath condo in 1979. That is like so super expensive. That's so super expensive. That tells you that was in Tamarack. That was the creme de la creme.
Yep. Well,
2,100 square foot condo, like you were living it up, but $104,000. It was like $103,000 back then. That's a lot of money.
I know. And so, I just think that it's important to note that about South Florida real estate, right? Like people in California during COVID, let's say for example, were like, we live in California because it's beautiful, which they're right. California's beautiful, but so is South Florida. And they're like, wait a second, you mean to tell me that I can go buy a home there for 40 or 50% of what I can buy one here, and I can live a similar lifestyle?
Right.
They're like, it's a no-brainer. Sign me up for that.
It's definitely cheaper than California.
Sign me up for that. Let me sell my property right now and go buy cash.
So we're going to go to commercial break, and when we come back, we're actually going to talk about down systems programs, because we definitely digress to talking about the wonders of Florida. I mean, listen, I love living here, and most New Yorkers hate it at first, but I love it. So anyway, we'll be right back. We're going to go to commercial and check out our amazing sponsors. Stay tuned.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at thelorasell.com. And now back to the show.
Hi everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. So we're here with Max Fish, and we are talking about mortgages and down payment assistance programs, and we got a little bit off.
Yeah, we tend to do that.
We got off on a tangent there. So here's the answers to your question, which is, how do we get free money?
Yeah, so it's actually cool. We're in a spot in our industry right now.
I thought you said a spa. Are we in a spa? I'd like to be in a spa.
did my
Sounded like a
accent?
spa.
Spot with a T.
Spot right now.
We're in an area in our industry right now where there's a lot of cool
sounded better.
programs, right, that are coming out. It kind of was spearheaded by Hometown Heroes a couple years ago, and hopefully that comes back.
That's gone, right?
It's gone for now, but they're not closing the door on it. So hopefully some of those funds come back. But we're in a cool spot to where there are grants and down payment assistance programs that are actually helping people. And because it's not super competitive, not that it's not competitive, but because it's not 2021 and 2022 with offers on the table, you can actually get into homes when you're doing a 3.5% down FHA loan. Whereas in 2021, it was hard. You were going up against 15 offers where people are offering $50,000 over appraised value, and first-time homebuyers had trouble keeping up.
Yeah, I
right?
get that, but where do we get the money from?
And so, well, now
Where's the money?
Yeah, now there's programs. So there's a FHA down payment assistance program where typically you need 3.5% down to put down. Now you can do the 3.5% as a loan, okay, as a 10-year loan.
So you have to pay it back.
But you have 10 years to do it.
Now, is the interest
The
more?
interest rate is based off of the majority of your loan, which is 96.5%. Whatever that interest rate is, let's say that's 6%. Then the interest rate on the smaller portion, the 3.5%, is 2% higher. So it would be
so like
8%.
Okay.
But on a $400,000 house, let's say,
It's not going to be much.
you're talking about
$12,000
you're talking about a $14,000 loan over the course of 10 years.
Right. Okay.
Your payment is probably $75 a month on that, roughly.
Okay.
And so for a lot of people, they would rather pay $75 a month than come out of pocket $14,000.
Especially if you don't have
Right.
it and you need a place to live. It's
Correct,
like,
correct.
So this is like a really good option for people that are renting where they have to come up with first, last security. And if
Yep.
you can get closing costs from the sellers, they're ultimately getting in there for no
Yep.
money.
I just did this. I just closed on using this program 2 weeks ago, and the person got into the house, closing costs and everything. They got a seller concession for closing costs. They got into the house with $1,400 out of pocket.
Wow.
That was it.
I mean, you're going to pay more than that. Plus, you're going to go, if you can close on like the 6th or 7th of a month, you're going to go basically almost like 60 days, not 50 days without a payment. So it's almost your rent isn't. Where do you rent for $1,400, right?
Yep.
You don't.
So that's a cool program that people are taking advantage of.
Yeah, I call that manipulation of the system, which is awesome.
Yeah, I think it's great.
I like to manipulate the system, find ways around to do things that are just so amazing that really just get you to whole nother level. And if the interest rates come down, max you're willing to do a free refinance, right?
Yeah, free refinance, no bank costs.
Just hard costs.
Yep. So then the other program, which is a true grant, this isn't a loan, this isn't, you don't pay it back. The other program
How
is
long
for,
do you have to hold it for, though?
which one?
The true grant.
You don't have to hold it. So I'll explain.
Okay.
It's a
Explain me, Ricky.
It's
Explain
a
me.
$5,000 grant.
Okay.
Okay, and with a $500 appraisal credit, so it's really $5,500.
Okay.
Okay, and the only qualifications for this grant are, number one, you have to qualify for conventional loan.
Okay.
Okay, number two, it's geographically based.
Okay.
Okay, and here's what's cool about it. A lot of geographical programs in the past, it goes based off of the new home you're buying. Okay, so you wouldn't know at the time of pre-approval if you qualified because it was based off of a home you were buying. Maybe you didn't
Wait,
find
go
it.
back a second. Go back.
Yeah.
Go back again. Okay, start again.
So a lot of programs that were geographically based in the past
Right.
were based off of the new home that a buyer is purchasing.
Okay.
Okay, but sometimes, actually a lot of the time, when you're pre-approving somebody that's looking to purchase a home,
Right.
they don't know the home they're purchasing yet.
Right.
They're still looking around.
Right.
This new program is based off of where you currently live, not where you're going to live.
Okay.
Yeah, it's based off of where you currently live.
Okay.
And the eligible areas in Florida, the main eligible area, there's different areas, there's Tampa, but for our purposes,
Broward.
is
Or Palm
the
Beach.
Tri-County area.
Okay. Yeah.
Okay? And if you live in the Tri-County area, you may be eligible. And what's cool is I can find out if you're eligible in 2 seconds.
Okay.
You tell me your current address, I plug it in to Fannie Mae's address search, right, within their geographical algorithm and base system. And it gives a thumbs up or a thumbs down.
But what if I want to move?
If you wherever you currently live, if it gives you a thumbs up, you're eligible for the $5,000 grant. Now
Anywhere?
they know, yeah, they know that you're aspiring to move because that's the whole point of this,
Right.
But it's based off of where you currently live, and they're going to verify that by is that address on your driver's license? If it's not because you didn't update it, maybe you have a utility bill in your name, just to verify that you actually lived at that address.
Okay.
And if that's the case, and I've done this probably 25 times in the last 90 days. If that's the case, then you get $5,000 applied towards your down payment and closing costs.
Okay. But that's not a lot of money, 5,000.
Well, I mean, let's do an example.
Okay.
Somebody's buying a $300,000 townhome
Which, by the way, I have
or
a few
condos.
good deals right now, by the
Yeah.
way.
So let's say somebody's buying one of your great deals, $300,000 condo or townhome. And they're putting 3% down as a first-time home buyer, conventional.
Okay.
That's $9,000. Well, that $5,000 just covered over half of that down payment.
Okay.
So now your down payment's only $4,000
Plus closing costs.
plus closing
But
costs.
you're trying
But
to get
again,
that from the seller.
but again, if you could negotiate that, now you're left with $4,000.
Okay.
And so you just got into a home for $4,000. So $5,000. I mean, if you're buying a $500,000, $600,000, $700,000 house, $5,000 is a very low percentage.
Right.
But at the end of the day, if all things are equal and the bank is going to give you a free $5,000,
Right.
it doesn't matter if you're buying a $5 million house. Why not?
Right. Right.
You know, there's no catch to it. So that's a really cool program that's out there too.
What about like some of these other? So I'm hearing a lot of things that like programs, not.
You gotta enunciate the last letter in that, just like I did with Spot.
Ship programs.
Yep.
What about those? What about that program?
I like looked at you and I'm like,
Oh gosh, we're having problems today.
there's plenty of the other types of programs
So what
too.
about? Yeah, I mean, there's all these different kinds of grants from the city.
Yeah.
You know, how hard are those to get?
Well, in my experience, they're very difficult. So those aren't things that I orchestrate. That's the problem. I don't have any control over it. It's done through the city. And a lot of the times the city requires you to go through this process that I've talked to clients, it could take a few months. But what's cool about them is if you do qualify for them, they'll give you up to, I mean, I've seen up to $50,000
Yeah.
as a
yeah,
down
I'm
payment.
hearing that.
Yeah, so
Which
I
just brings down. It's not like you need all that money. You're just bringing down your amount owed.
Yeah.
Is that stuff required to be paid back? Is it?
So my understanding is the city doesn't require you to pay it back. I've seen in certain cities that if you sell before 5 years,
Okay.
then at the time of sale, you have to pay a portion of it back.
Okay.
But every city has their different nuances. But yeah, cities, you can apply for those, but just know that that's not something that you're going to find out in a day, weeks, month. You know, it might take a few months. Yeah.
Well, let's see. So we talked about grants from the county. We've talked about 2 programs that you have. Anything else? I mean, obviously, a lot of times buyers and sellers get all confused about asking for closing costs back.
Yeah.
Sellers are always like, well, I don't want to pay their closing costs. And it's like, well, it's not technically, I mean, yes, you are paying their closing costs sometimes when they ask for a credit back. But in reality, it's their offer that they're offering you, right?
Yeah.
So if you're listed for $600 and they're offering you $600 with $10,000 back, they're offering you $590. Like, you know, because like I know a lot of people are doing the buy down programs, you know, the 3-2-1. You know, I don't know if you're like, it depends on the situation whether or not you're for it, not for it. Sometimes it makes sense to do other things.
Yeah.
Why not buy the rate down permanently versus doing it?
It's all about, and it kind of goes full circle back to what I said, that, you know, the finance being 80% behavior and 20% math, because it just depends on the specific client situation, right? If the client is very monthly payment sensitive and they have a bunch of money saved and they're not worried about the out of pocket, they're more worried about their monthly nut, right? Then then a buy down might be great for them. They don't care about closing costs. They don't care about, you know, the down payment. They might want to apply any potential seller concession to a 2-1 buy down, 3-2-1 buy down, and make their payment less.
And that's what the seller should be offering in order to get them sold when they're not moving, right?
Yeah, and it just depends on the specific. There's some people that they're worried about their out-of-pocket costs at closing. So that seller concession might mean more to them than lowering their payment, right, on a monthly basis. So it just depends on the specific client situation, but that's why I think that I've been able to separate myself from a lot of mortgage people in our industry, simply because I really sit down with each client and go over, here are your options and here's what I would advise given your situation, right? And what is it that would make you feel most comfortable in this situation?
So I guess, and I'm trying to, like, there's so much going on, like there's so much about, like, all this is kind of, there's a lot, right?
Yeah.
So I guess the question is like, think you're going to see a lot more short sales and foreclosures coming up based on some of the things we've done in the past?
I don't personally, because I see what people have to go through to qualify.
And a lot of people say, short sale, what's that? And they're like, they think it's short, but there's nothing short about it. It's so long, it's not even funny. So
I just see what people have to go through to qualify for loans, and the people that are getting loans can afford it.
Right.
You know, so barring anything crazy happening, there's, you know, I don't see a lot of people needing to go into foreclosure just because they have stable jobs, they're verified, they're, you know, their debt to income ratio is low. So, you know, that's why I don't think there's going to be some mass wave.
Right.
If that makes sense.
So if people are thinking about getting a mortgage or refinancing, right? Sometimes it makes sense to refinance.
Yeah.
Depends on what you had before. Maybe you have huge credit card debt and it might make sense to just wrap it all up into one, right? Just so you can get ahead of the game. What is a good number to call you?
Yeah, so anybody can reach me at 954-729-6933. That's 954-729-6933.
And if anybody can tell us what chicken means, right? Like,
I know, I haven't gotten any chickens.
yeah, roosters?
We got to change that maybe.
Maybe.
Maybe
Well,
next
let's
time.
see. Well, we're getting ready to leprechaun. We're getting ready to go into March.
Oh, that's not a bad idea.
Right? Could have been Cupid, but now we can go to
Bold.
leprechaun.
Yeah. Leprechaun, I like that.
Leprechaun.
Yeah, let's do that.
Yeah, leprechaun. So if you say leprechaun, you can get a free appraisal when you use Max for your mortgage. So let's hear the word leprechaun.
Yep, let's do it.
Yep. And what is a good website for you?
Yeah, so my company's website is NWM for Nationwide Mortgage, corp.net.
Great. Well, thank you so much for joining us, and thank you for joining Making Money with Laura Sanders. And if you're looking for an amazing realtor who's got an amazing track record, I'm actually her. Just so you know. Just so you know, it's me.
So she went to weird places to get there.
Yeah, I had to work very hard to get here. So give me a call at 954-650-0827 and check out my website at laurasell.com. You can check out all of our new listings right now. We have some amazing listings right now that I would love to share with you. Give me a call and let me see how I can help you out. Have a great night, and thank you for listening.